The Nifty has hit a 7-month low today, and we've closed below 23,100. Remember, we're looking at sectoral plays, and all of the indices that we are looking at, they seem to have taken a dip in red territory today. So that pressure that has been building on the markets has been consistent, and it has been building up over a period of time. And in 2025 so far, the red has really been more profound than any other color that you might think of. But looking at market moves since the start of the year, you're looking at the Nifty having lost as much as 2.4%. And among the sectors, which ones were the biggest hit? Because sectorally, we're seeing red all across, but there were some sectors that really stood out for the kind of losses that they've registered. One of them is realty. It has been the biggest laggard as far as trade is concerned. And the culprits for the kind of down move you're seeing in the markets, definitely the Indian currency, which has weakened, and we're talking about RBI interventions as well, which would be the most effective. And the cost of our foreign reserves, our forex reserves getting depleted. We are talking about the weakening rupee and what the RBI can do, and indeed what the Fed is likely to do in light of Trump's policies and the kind of jobs data that we've seen in recent times. All of that is on our radar. Also, what we are tracking are weaker FII inflows, and that has a bearing on how our equity markets move, as also a stronger US dollar, which is going to have definitely a bearing on how the markets, the direction that the markets take from here. So tonight on India Tonight, we're delving into the kind of volatility we are seeing in the Indian rupee and the kind of impact it has on the markets. To do this, to break this down for us, Jamal Miklai is joining us, Managing Director of Miklai Financial Services. He'll help us decode the factors at play, global dynamics definitely, domestic challenges as well. And for what this means for the Indian equities, Mayuresh Joshi is with us, Head of Equity at MarketSmith India. Thank you, gentlemen, for making the time this evening. Mr. Miklai, when we talk about the Indian currency, we seem to have these strong worry lines today. Each of them seems to have a name. One is Trump's policies, other is called rising oil prices. How deep do you see these worry lines extend the rupee's depreciation now?
Well, I think it's become pretty clear that, RBI's policies over the last year and a half were badly faulty. A lot of analysts have talked about it. And, in a market, you cannot eliminate volatility. I mean, volatility is the natural property of markets. Now, RBI has done that. And one of the results was sort of volatility slipped into different areas. And when things fell apart, like when Trump was elected, right? The dollar went up and the rupee just crashed, right? I think the approach should have been different. But there's no point talking about what should have been. What do you do now? See, what has happened is the market is now in control, right? And what RBI needs to do now is they need to come up with some different kinds of approaches. For instance, perhaps they need to come up with a new NRI bond. They need to tell the market they can't keep buying dollars, right? The reserves are down in the gutter and they will keep falling. So you can't play the market's game. What you've got to do, you've got to come up with a new game in town. So if they have, let's say, an NRI bond at a high interest rate, it will cost. But let's see, to my mind, it's the only thing I can think of that would actually bring some fresh dollars in and perhaps slow down the terror.
Let me take this across to Mayuresh as well and understand how he sees Indian equities. Lots of take on how the Fed is going to move next, Mayuresh. The jobs data, for one, was stellar. Very good for the American economy, most say, but bad for the markets in general, globally, but including ours. You agree with that?
Yes, I think the markets are exhibiting that. Evening to you, Vikram. I think two aspects. One, I think the data points that are coming from the US markets are indeed very, very strong. And therefore, the expectations in terms of a stronger dollar, weakening emerging economic currencies is creating a double whammy effect for the markets. Obviously, I think how earnings will play out is going to be tactically and structurally important for our markets. Not from the standpoint in terms of how earnings have been so far, but the expectations in terms of future earnings growth in lieu of global growth slowing down and in lieu of a lot of macro challenges and headwinds that the globe might probably face. Obviously, India might do a tad bit better, but is that good enough in terms of the premium valuations that we were getting so far? And therefore, I think with the yield surge that you've probably seen in the US market, 10-year US yield has almost touched 4.7, 4.75. To that extent, the equity risk premium obviously narrows down to a large extent. And because of all these factors at play, the expectations of the dot plot in terms of rate cuts for 2025 has come down to 2. So I think a large part of emerging market rate cuts, including India, might also get narrowed down. And therefore, I think a combination of all these factors have probably pulled both the sentiments and premium valuations that the Indian markets have probably got so far.
Yes.
But again, I think the larger picture, Vikram, is outside US. India probably remains one of the better markets.
Still, you say, despite what's happening globally, India is looking quite strong. Mr. Meklai, we really don't know, like Mayuresh is pointing out, how the Fed is going to move on interest rates, how much slashing of rates could happen, how many times it could happen this year. What's your sense on this, and how do you see that impacting the rupee?
See, I think actually right now we're caught between a rock and a hard place, right? The dollar has been going up because of the stuff Trump has been talking about, right? Crazy stuff, right? But nothing goes in one direction forever. So it's conceivable the dollar will stop rising, which could theoretically take some pressure off the rupee. But equity markets in the US are in deep shit, excuse the expression, right? When interest rates are high, they've already started falling. I could see them falling much, much more. So I said the rock is the dollar getting strong. The hard place is if US equities really crash, which is certainly possible, right? That could create a risk-off sentiment. And again, money will flow out of India. So I'm saying right now it's very, very difficult time. Like I said, RBI has to be really creative in terms of how it tells the market, hey, baby, I'm in charge, right?
So, yes.
Ultimately, nobody is in charge. The market is the boss. But you need to sort of find a way to stabilize things. Right now, it's time to look for stability.
Right. So depleting forex reserves is not the answer. You're saying something like an NRI bond is something that the RBI needs to consider. But let me push you and ask you, Mr. Meklai, at what level do you see the Indian rupee settle against the US dollar, and by when do you think that could happen?
I think it'll reach maybe 18,000 to the dollar. Don't ask me questions like that. Anybody who makes a forecast is a fool. And that's the one thing I know. Nobody can forecast anything. That is the meaning of a market.
But at the very least,
you guys need, you ain't getting it from me.
But Mr. Meklai, at the very least, will you say that Trump's policies, the American economy's strength, the high interest rates over there, and in general, the global liquidity tightening that we are seeing, how much strength are all of these going to give the US dollar at least?
See, like I said, the dollar is now very, very close to one of the highest it's been. Okay? And again, the key thing is, just because interest rates go up tomorrow doesn't necessarily mean the dollar will keep following.
Yes.
Markets are not like an electric switch, Sometimes it does this and sometimes it does that. So my personal feeling is the dollar will stop rising perhaps on Jan 20th or right around Jan 20th when Trump actually comes in. However, like I said, that may not be enough because, we have the problem of US equities. And I think that I'd be curious. Sorry, I didn't get your name. The other guy on the thing. What do you think of US equities?
Oh, Mayuresh. Are you asking Mayuresh?
Yeah, please go ahead.
Mayuresh, that question from Jamal Meklai to you, and of course mine too, about the dollar. If it keeps strengthening like this and there is uncertainty about the Fed's moves, will we see the FIIs pull out? Will they continue pulling out that much more?
So Vikram, I think they have pulled a substantial lot in the last few months. Now, the entire question is whether the US economy's strengthening moves that we've probably seen through data points that have got exhibited so far continue to grow at a good pace. As Mr. Meklai said, I think what Trump probably announces post-Jan 20th is a large unknown to a large many people on the street. And therefore, I think any moves that he probably does is going to not just impact the US markets, but a lot of growing and emerging markets as well. The entire perspective, again, is not that India is the only market where outflows are probably happening. If you probably look at the dollar index itself, the dollar index itself has strengthened, which probably means that out of the 6 major economy currencies that probably are seeing some element of outflows, a lot of the other emerging economies are also seeing outflows at this point of time. Let's also not forget, Vikram, that the Chinese yuan is also getting devaluated. So to that extent, if we want to maintain our competitiveness, the rupee depreciation is a serious threat for our economy. And the measures that Mr. Makla is suggesting are serious and earnest and good ones. However, I think a combination of these factors, as I've again time and again pointed out, with premium valuations, I think the kind of pullback that we've probably seen might continue. So I think we have downgraded the markets at this juncture because a cocktail of all these factors, which might not support the premium valuations that the markets are probably getting at least at this juncture.
What we've seen in the past, Mayuresh, where DIIs have stepped in, do you see them again filling the gap that the FIIs create?
So at some point of time, the markets correct a tad more. It's very difficult to call levels, but again, it comes down to 22,500, 22,800 on the Nifty. Selective buying will start taking place because a lot of DIs are on the sidelines. You've also got alternate money in AIFs, PMSs, which are also on the sidelines at this juncture. And therefore, I think as this part of the equation starts getting deployed into the market, there will be some element of offset that will come through. Again, Vikram, a large part of the markets are oversold. You've probably seen a large part of the markets where selling has probably exaggerated over the last few days. So a technical bounce back is not ruled out. But again, I think it's going to be very, very sector and stock specific, at least for the next few weeks and months for the Indian markets.
But compared to what Mr. Makla is saying, Mayuresh, you seem more sanguine about the possibility that the Indian markets are going to hold out. Do you think domestic earnings are going to come through? Because the last couple of quarters haven't really done much, and the upcoming union budget, perhaps that could act as a counterbalance to the kind of global pressures that we are seeing weighing in the markets. Where do you find this strength that you see in the Indian markets right now? Because all across the board, see how Nifty has hit a 7-month low. Yeah. You're seeing realty, you're seeing metals, energy, PSU banks, auto. All of them have hit lows, 1 year, 7 months, all across the board.
Absolutely, but we were also the best performing markets, Vikram, over the last 2.5 years. So let's not forget that. Having said that, I think the expectations in terms of policy decision making and what can come through the budget, expectation is obviously, I think, a little bit more positioned around a large part of the capital allocation actually improving, expectations of some element of tax concessions and budgetary support for trade, commerce, and agriculture as well. So if it's a well-balanced one, and we are adhering to the fiscal deficit number as well, which we will, in my opinion, I think the market should take that with both hands. Again, I think the earnings slowdown that we've seen in certain pockets, including consumption, specifically metro consumption to a large extent, I think it's not a structural one, Vikram, in my opinion. Again, I think it's more a cyclical one, which over the next couple of quarters should largely get over with. You've seen good monsoons. Rural discretionary spending should come back starting this quarter itself. And therefore, I think the offsetting factor of all these elements put together would probably mean that as we head into Q4 and at the first half of the next financial year, earnings should start coming back, in my opinion. And as they come back, if the markets probably go into a price and time-wise correction as well over the next few weeks and months, will present good opportunities for the Indian markets as well.
Mr. Makla, do you share the kind of confidence that Mayuresh has at this point in time? Because I wanted to ask you about your reading of our inflation print as well, since he started talking about consumption. Our food inflation has hit a double digit in October, but since then we've cooled off in December if you look at today's print. But how much of a risk is elevated inflation at this point to the value of the rupee, and do you share his confidence at all?
See, I think India is well positioned. There is no question, right? The whole issue is how long will the storm last, right? I mean, you know, the budget, et cetera, obviously they'll try to do some positive things to improve sentiment. As the domestic investors have a lot of cash, right? So those are positives. But my sense is that, you know, I wouldn't go into the water when it's storming, right? So we really need to wait to see how long it takes. 2 years from now, we'll be in great shape. Let's put it that way. The question is, what will it be like 2 months from now? And that, I think, really depends on, unfortunately, what Trump does and how the market reacts to that.
Exactly.
You know? Because my real concern is that, you know, the kinds of things he's been saying are economically nuts,
Sure.
right? And if he continues to pursue them, see, like I said before, the market is the boss. Even if you are Mr. Donald Trump or Mr. Elon Musk, you can't control the market. So overseas, the market is beginning to get a little rocky. I think US rates are not going to come
Yes.
down. The only
Mayuresh,
point is that the dollar will not keep rising.
right.
But my concern is US equities, if it drops another 15%,
Right.
right? There's no way India can go up.
Right.
And I'm saying that is the risk.
Right.
So I think right now you got to just pray and hold tight.
So how much of that uncertainty that Trump poses, Mayuresh, has been factored in by the markets? Can it really? And in light of that, which sectors among Indian equities do you see as most vulnerable to the kind of volatility that may come our way, and which ones do you see emerging, well, relatively unscathed from what's going on now, or what could happen next?
It's very difficult to say, Vikram, I think. I'm not even sure if Trump would be knowing what he's going to probably announce at the moment that he announces, right? So I think it's a large unknown that we are all living with. But again, I think we've done a minor study in terms of the tariff impositions itself. And if there is a reciprocal imposition of tariffs, I think India is going to be better off compared to the rest of the pack because as far as our trade is concerned with the US, we are importing a lot more than we are probably exporting. I'm leaving aside IT services at this moment from this equation. And I think Trump and Elon Musk have probably put in their comments in terms of the H-1B visa, which sound very, very supportive for the sector as a whole, along with good earnings, which have come so far as well. And therefore, I think we should be largely unscathed to a large extent compared to the rest of the emerging pack. Right. And that's the logic that I probably put forth. That if the US is strengthening, if the US is growing at a good pace, outside the mother market, which is the US market, I think the next best market is the Indian equity market.
All right. Well, there is no doubt that we are navigating through these turbulent times, and it's quite clear as well that a mix of global influences and domestic resilience, they're going to shape the rupee's path. And the focus now is, of course, going to shift on how India can harness our internal strengths, weather the external shocks. And we have the budget to look forward to. Key policy decisions could set the tone for the coming year. And those cues the markets are going to watch all too closely in these volatile times. Mayuresh Joshi, Jamal Miklai, thank you, gentlemen, for joining us with your insights on the show. Great to have you with us.